How you doing? This is Paul and Kobe on Montgomery Lane, Bethesda, Maryland. We're here to talk about tax planning. We talk to clients this time of year for a lot of different reasons. A lot of the reason has to do with we don't want to talk to them about tax planning in March and April of next year when they say to us, how can this happen? We want to talk to them now. That way they can plan for it. So let me ask you a question, Kobe. What is tax planning? And why should I care?
First reason on why you should care about tax planning is that the first thing is we want to avoid any unexpected results that would occur during tax preparation time.
What is unexpected results? I don't know what that means. What does unexpected results mean? Let me give you a clue. So April 1, we tell the client he owes $50,000. That's called unexpected results. The reason is because in November and December, when we should have been talking to him, he was making decisions in his business, buying equipment, giving employees bonuses, spending money on different things. When the reality is what he should be doing is he should be paying the tax first, then make those other plans, not putting tax at the bottom of the line so that when it's finally due, it's all of a sudden a surprise. What does this process consist of, Kobe?
Yeah, so the first thing that we do with each and all the business owners is review your business and individual tax situation. We want to make sure that you are aware of where you stand on your business and individual taxes for both state and federal.
One of the things that's come up in the past in Maryland and Virginia, if you own a business, Virginia just changed theirs just 2 weeks ago. If you pay your state taxes through your business, you get a deduction for it. So, for example, on an individual tax return, deduction of state taxes was taken away from us. This is a cap of $10,000. Many people go above that with just withholding and real estate taxes. So, if you pay it through your business, you pay $10,000 through your business. Tax bracket is 35%. You're going to save a third in tax by paying through your business, but you got to pay it before the end of the year. So, all the businesses we do work for pay the state tax on their company profit before 12/31. And deduct it. We follow many accountants that don't bother to do this, and as a result, their clients pay additional federal tax because they can't deduct their state tax. What other situations come up that it's good to do tax planning in the fall? Mostly having to do with, come April 15th, there's a penalty if the tax is paid after, even if you file an extension, there's a roughly 0.5% penalty per month from April to October, and after October it's 6%. So if you don't get your documents together, if you don't let us put your numbers together, then before you know it, it's June. Maybe you don't get the tax return done until September or past October, and you incur penalties and interest. There's always penalty of interest on tax returns that are filed after April 15th with a balance due. Doesn't matter if you do an extension, there's still always a penalty.
The next thing that we want to talk about with all business owners is that we would like to make recommendation on any items that can be completed by year end to minimize tax. So this could be number one, this could be paying your bills for a year end. Number two, purchase and investing in equipment for your business. Number three is contributing to pension plans, or if your business does not offer one, starting a pension plan.
So paying your bills before the end of the year, it seems pretty easy. Most small businesses, many these days, file on a cash basis. So the checks need to be written in order to get the deduction. Many businesses completely pay everything out, then at least that'll beginning of the year, they won't have any bills, and the tax will be minimized for the previous years. If you're going to buy equipment, computers, trucks, you're going to buy it anyway, January, February, March. If it helps you in your business, then you do it before the end of the year. These days, we expense virtually any equipment purchased completely completely as soon as they're purchased. So you get a deduction if you spend $10,000. You get an immediate deduction, you save $3,000 or $4,000 tax. Pension plans, I always wondered why clients sometimes pay their IRA right before April 15th. Smart people pay the traditional IRA. They pay that beginning of the previous year. They pay it in January 2021 for 21 and don't wait until April of 22 to pay the 21. You might as well do it in the beginning. That's the way it gets paid. It tends to be in tax time the following year. You have other things to deal with. You pay your pension first. If you want to adopt simple IRA, 401k in 2022. We still do it this time of year. It's one of the best first steps you can make in taxes, because you deduct it this year, you don't include it in income, and it accrues tax-free.
Yes, then just to piggyback on what Paul just said is, the last thing that we do with all business owners is that we make recommendations based on applicable personal financial planning. Just means we go over any issues or any ideas that we may have. If you have any extra business income, we see that, hey, like you don't have an IRA, we can open up an IRA for you, or we can go with the taxable account route. So what do you as a business owner need to provide us with to participate in tax planning? The first thing that we need information from you to make intelligent, data-driven decisions. If your business accounting is handled at your business, we will request a updated balance sheet and income statement from you as of October 31st, 2022. If you use our CPA to outsource your firm's accounting, please make sure that you are current with your accountant on sending what we ask for monthly, such as bank statements and other accounting information. If you guys have any questions, please give us a call at 301-657-8080.
So for tax planning, we find many accounting firms skip this step. So they might charge less, but they skip this step. So they don't tell their clients what they owe till the following year. So if you're going to do something, see us November and December, and let us see if we can save you some money and put you in the best financial position.